It's 6 o'clock in London. It's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. And indeed, 2200 hours, 10 p.m. here in Abu Dhabi in the United Arab Emirates, where I'm coming to you live this evening. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID live stream, Series 16, episode number 1. That in the aggregate reaches episode 91, starts here. Let me begin by saying thank you very much to Hugh Jones, a doyen of parish journalists in the world of exchanges, regulation, financial markets, for quoting me in his latest article discussing euro clearing. Well worth reading that analysis. Frankfurt stirs up euro clearing battle with London, which you can get via Reuters and Yahoo Finance. Equally quite interesting to see that there's been, a lot of discussion about the terrible plight of TP ICAP, which continues to trend lower after 5 giddy years of shareholder destruction. Elsewhere, the biggest shock of the week, perhaps, was from liquidator John J. Ray, the new FTX chief, saying that perhaps the crypto exchange FTX could restart. Can it really do Lazarus repo, I ask myself? I'm not entirely convinced, ladies and gentlemen. Our guest today is Bruce Goldberg. Bruce is going to be discussing the topic, why the world needed a fifth options exchange. He's the CEO and founder of Goldberg Group, a leading authority on brand positioning and marketing across the world. He was formerly Chief Marketing Officer at the ISE, the International Securities Exchange. His award-winning Revolution branding campaigns helped establish the ISE brand as it grew to become the largest US options market by 2003. Formerly at CBOE, Bruce's achievements included branding leaps, while previously he was product manager in an entirely different sphere at Frito-Lay's two largest brands, Lay's and Doritos, where his marketing initiatives drove record growth. Bruce, good evening. Welcome to the show. Hello from Abu Dhabi. Where in the world are you today?
I happen to be in New York in my apartment. I mostly live in Dallas, but I'm in New York today. So anyway, greetings to Patrick and everybody worldwide.
Terrific to see you all together, Bruce. So, no, I'm just thinking back. I mean, we've known each other for 20 some years now, dating all the way back to the embryonic days of the excitement of the International Securities Exchange. But tell me, I mean, how did you actually come to be in the marketing business in the first place?
It was something I wanted to do going back to, I guess, my college years, thinking about it. Originally, when you think about marketing, you think about advertising. I thought I might do that, but then I realized the more complete picture for a marketer was to be on the brand, the product side. I went after my undergraduate school. I didn't have a job. I coached swim teams, and then I got a job with Procter & Gamble in their general advertising areas. Eventually, I moved into their branding side of the world in their first forays into RX goods, the original incarnation of that. Then I decided to go to business school, where I went to Cornell. In Cornell, I thought seriously about going into banking. I opted out. I was able to place out of the basic marketing experience because of my Procter experience. I started taking a lot more finance, which I really never had exposure to, and ended up becoming a finance/marketing major. But I ended up opted to stay in the marketing world, and I went to Frito-Lay after graduate school. Went in one level above because, again, my Procter experience. And briefly spent some time within one of the other PepsiCo companies, Pizza Hut, back to Frito-Lay. And ultimately, as Patrick said, I ran the two largest brands, Lay's and Doritos, did some other things, and then I wasn't going where I wanted to go there. So I ended up leaving, ultimately ended up at the CBOE. So I ended up in the finance world eventually, with that as both a desire and an expertise. As a retail investor, I'd actually traded options And in the CBOE's position was, let's find a marketing guy who comes out of packaged goods, because, and I'll state this and I'll come back to this theme later, if you understand branding from a packaged goods standpoint, and certainly with the pedigree that you get from a Procter, or that you get from a Frito-Lay, you're able to go and fundamentally work on lots of different products. So the CBO wanted someone on the basis that we can't teach a broker, a floor trader marketing, but we can teach a packaged goods guy what options are. And I really was like, I'm a competitive swimmer, duck to water. I really enjoyed the experience. I started trading. You really need to know your product. Notably, something like a consumer service or a service marketing such as options is far more complicated than knowing a lot about chips in terms of their consumption, how they're made. You really need to have a lot more perspective, and it's a much deeper, richer, far more difficult position for someone with a marketing background or any background, because you really have to understand and know your product, the ins and outs. And certainly when, in the case of Leaps, when I was writing all the materials, I needed to know and have a good understanding of the product, of options, to be able to write about it. Ultimately did a lot of teaching, seminars, not only about Leaps, but about options in general. So that led me to the financial services business. Had left, and then the ISE came calling. I knew two of the founders, David Krell and Gary Katz, from their days when I was at the CBOE and they were running the New York Stock Exchange options business. And similarly, two of the other founders of the ISE, Bill Porter from E-Trade, was chairman and founder of E-Trade, and Marty Arverbuck from E-Trade. They wanted someone who knew both branding and options. And I may have been the only guy in the country, or the world for that matter, who really had that experience, deep experience, not just limited experience, deep experience in both. So it was a great fit, and for 10 years I was at the ISE. So little circuitous path. People think it's very interesting and different. It clearly is different. It was very interesting, and I wouldn't have said, I wish I stayed, in the packaged goods business, because I really came to love and enjoy the derivatives business.
Fascinating stuff altogether. I'm going to come back in just a second, so let me just say hello to some of our regular viewers. Good evening, Patrick and all, says John T. Hey, John T, it's lovely to see you. Thank you very much for joining us this evening. Anthony Clancy, good evening, Patrick. Hello, Anthony. It's lovely to be saying hello to you in dear old Blighty from the United Arab Emirates this evening. And indeed, similarly, Les Calvert, good evening, Patrick. Lovely to see you, Les. Thanks very much for joining the show. And hello from Abu Dhabi. It's great to be here. Great to be able to live stream as well, even though it's quite late in the evening here. So, Bruce, I mean, we're discussing why the world needed a fifth options exchange. We're going to get to in a moment, but I'm very interested in the sort of raw science of marketing, because you mentioned the fact that there's a lot more complexity to the financial market. One thing that strikes me is there's also got to be presumably a lot more complexity in judging what works. Because, I mean, Frito-Lay, you've got very, very rapid response. I mean, people impulse buy their potato chips or potato crisps. So therefore, it's clearly possible to see quite rapidly whether a campaign is working or not working. I mean, within certainly weeks, if not slightly longer period of time to get all the data. But with financial markets, how do you actually know when a marketing campaign is really working, given all of the lags there can be towards people actually trading your product?
Yeah, in the packaged goods business, you have so many different ways to test things. You can test things in a test market. You can test things in limited stores using scanner data. You have immediacy of feedback. You have immediacy of gauging response rates, whether you're running an online campaign, an 800 direct marketing campaign using lots of different mechanisms. In the options world, it's very, or the financial services business, it's something you can't call an 800 number, and well, I guess you can via a broker, but you still have to go through a broker to buy an option. So I would always stress to my people, who worked for me over the years. If you have an idea, you want to go ahead and test it. If it works, great. Try it again. Do it somewhere else. Do it greater. Do it differently. Do change it. If it doesn't work, kill it or modify it and try it again. And so in the options business, if you have something, you basically not being able to, okay, I'm only going to make this product available in Columbus, Ohio, for example, as you could in the test market, in the restaurant business or the packaged goods business. So you're doing things more broad scale, and it's limited because you don't know. I don't know how many calls I got to this 800 number. I don't know how many calls, how many responses I got to online. You can test your advertising campaigns, obviously using the science part of marketing. There's an art and science to it, and see what happens. But broadly in the options business, if you're going to try something, you're going to go out and have to do it broadly and then see what kind of response you get. When I was at CBOE, we had lots of different products we would launch, on a lot of them on the index side, and you basically would put them out there. You did different things to support it. You see what kind of responses you got, but at the end of the day, you really needed to see what happened in the marketplace, what was trading. If you go back to the .com era, you'd say, well, I got thousands of clicks. Well, who cares? You got thousands of clicks. Did you get any sales, or what kind of sales did you get out of it? So it is notably more challenging to gauge things in the financial services market. And it's really, at the end of the day, it's got to be based on what kind of performance you're seeing, as opposed to what kind of scores you're getting in product tests, scores you're getting in the copy testing, or things of that nature.
It's a really, really interesting issue, and certainly quite sensational that we've got, for once, an area where the general industry of retail goods is much more low latency in its results than the financial markets, which we're always used to being so fast moving and so low latency and so on. An interesting point to ponder. Let me just say hello to Simon Huckle. Good evening, everyone, says Simon. Simon, it's great to see you on the show. Thank you very much. Greetings from Abu Dhabi. So, Bruce, it's difficult to believe the following story, and correct me where I may have made a mistake, but you mentioned two very interesting men we'll get to in a moment, Gary Katz and indeed David Krell. And they went on to found this thing called the International Securities Exchange. But it's rather difficult to believe. As you mentioned, you'd first got to know them at the New York Stock Exchange's options market. And can you believe it, ladies and gentlemen? When was that? 25 years ago or slightly longer? The New York Stock Exchange actually sold their options market. Right. As far as I remember, they sold it to CBOE.
Correct.
Because they didn't see much future in the stock options market, and they decided to offload their floor and let it effectively gravitate towards Chicago.
Well, I think if I recall correctly, the New York Stock Exchange had about a 1% share of the options marketplace, and that may have been 2 when you take out index options, which are really fundamentally not traded at too many other places. CBOE dominant position there. So I can't speak to why the New York Stock Exchange ultimately decided to change, but they did, and they made that change. But that allowed Gary and David to start their consulting company, and they connected with Bill Porter, which led to the ISE. So at the end of the day, it worked out quite well for everyone.
So going back to that time, we had this amazing oligopoly, 4 options markets floors, and the ISE came up with this radical new electronic vision of markets. Really must have been quite incredible to get involved in that business at the time.
Well, I will make this point when we get into talking about the branding campaign. The electronic nature of the world, of the options world, was an enabler. It was far more than being an electronic exchange, which led to the success of the ISE. It was the market structure, the rules, the how you made their vision for multiply listing everything, which you're right, it was an oligopoly. If you wanted to trade IBM options, there was only one store in the world to go buy them. That was the CBOE. Microsoft, Apple, et cetera, were traded singularly. So it was the electronic nature, which really, it was starting to become the global standard, but it was far more than the electronic nature that led to the success of the ISE. It was many things that, Gary and David in their great wisdom put together in terms of how they would enable market makers and customers to access the exchange in terms of the rules, in terms of what was ultimately called the bin structure, and the commitments people needed to make. So it went far beyond just simply being electronic, and that was the key point of difference. And I would stress that to not only to journalists, it was not just because we are in an electronic marketplace.
That's fascinating, because I think a lot of people think of ISE as it came along, it did things electronically, and suddenly, therefore, the world changed, and that was how it moved on. But as you say, the single listing, as there had been previously, so everything cleared into OCC,
Right.
but effectively each of the different exchange franchises. So what were the four at that stage? We had CBOE, we had Philex, we had Amex and P-Coast.
Right.
And it's quite fascinating to see how they each had a very, very singular difference. I remember, just as an aside, in late 1999, after Capital Market Revolution come out, going to the floor of P-Coast for the first time and being fascinated, because all these market makers are standing around in the pits with medical, as they were called, medical tablet computers, so they could touch the screen and trade on them and so on. And they were all looking at me and going like, how do you feel about this? As here we are, we're trading the brave new world of technology. And they were trading all of the new names of technology at the time.
Right.
And yet they were all doing it by shouting at each other and using this tablet computer, which I always thought was slightly bizarre. But it's interesting. I mean, the whole ISE vision was a holistic change for the world. And I suppose that's part of the reason why effectively the four-party oligopoly really needed a shake-up, and why we needed that fifth options exchange.
Absolutely. It was a horribly inefficient, expensive marketplace. And that's what actually led Bill Porter, when he was running E-Trade, he had a conversation with the SEC. They wanted, because of the expense and the cost of trading options for their retail customers, or all customers for that matter, that he wanted to have a better, cheaper options exchange. And the SEC said, well, you can create a new options exchange. You have to go through the approvals, obviously, but it can't be owned by a brokerage firm. And so that was the genesis of Bill thinking and hiring David and Gary to contemplate how they might do that. That would be separate and apart and independent from the brokerage firm E-Trade.
So that was created as a separate entity. It launched in 2000 AD. And I suppose lots of people had a bit of revolutionary zeitgeist around. Some guy had written a book called Capital Market Revolution not that long before, and things like that. Right. Tell us a bit about how you got into that business of really, I mean, you were branding a brand new exchange, which was a very, very funky thing. There hadn't been a lot of new exchanges around in such scale for a long time.
How did you first in decades?
Decades. How did you go about that process?
Well, I came to the ISE 1 year after they had started. So they'd proven that the technology worked, the market structure worked, and they were growing. But at the time I came, they were still the fifth largest. Products or options were multiply listed. When the ISE first announced in November of 98, I believe, they said we're going to trade options on virtually everything, or those that account for 90% of the volume in the industry. The other exchanges eventually decided they better, with the ISE coming and the belief that it was really going to happen, they ended up starting what we used to call it the CBOE, the multiple listing war. Back in the 90s, when I first got into business, 89 actually, again, it was a monopoly. Trade IBM, you traded it at the CBOE. In 1990, the SEC allowed or said, we can't do that. If something new comes up to trade, it can trade anywhere. So you basically had originally some kind of a lottery that people would pick things, and then other things that were going to be traded more broadly. But in 99, I believe, the other options exchanges started trading things multiply. I forget, somebody traded Dell, which I think was trading at the Philex, and then people started trading. So it really became competitive, and the monopolistic structure was broken. And then the ISE started, and so you had the first competitive start at the beginning of the competitive world, and then with the ISE structure, you really had a different model. So when I came to the ISE, long-winded preamble to the question, we had something that was better, but in the marketing that had originally been done, it really wasn't as focused or defined on how we were better. So I was brought in, given my packaged goods and options experience, and I thought about it, obviously, well before I took the job, and then taking the job. And we went through, and I'll go back to my Procter and Frito heritage, went through a very disciplined process. Packaged goods marketing, there's a discipline, it's very thoughtful. And we went through a formalized branding exercise. One of the first presentations I did for Gary, who was my boss, was talk about the brand. A brand is an asset, like any asset, any company has. And really, you need to maximize the value of that. And what I went from there, we went through a formal positioning exercise. Took numerous months. Started with lots of internal interviews, external interviews, and really what you wanted to create in the positioning was something that would be the ad campaign or the tagline or anything like that, but it would be the basis from which all marketing, and I mean all marketing as it related to what you tell customers, a sales effort, your public relations efforts, if anything that you did would reflect the positioning of the company. If I was doing a presentation, if David or Gary or anybody was on a panel making a keynote, we all were singing from the same songbook. So we went through a very formalized positioning study, and we went through that. We presented it to management and ultimately the board, and then they agreed with it. And basically, as you saw, as it materialized, it was articulated in what we call the Revolution campaign. It was really talking about the demonstrable benefits that the ISE offered that were simply not available anywhere else. And it was revolutionary in the sense that not only the ad campaign, but what the ISE had put together was so revolutionary and so much better and discernibly better and notably better and unassailably better, because it would take years, as it did, for the other exchanges to catch up. That was the genesis of of the campaign. And it wasn't just what you saw so dramatically in the advertising, but it was seen in everything, every external as well as internal discussion of the ISE brand.
So the brand took a huge amount of work to put together. It culminated in the early stages in this Revolution campaign, which was an award winner, if I remember correctly.
Yeah, we won the financial services community had a competition, and we won Best of Show. And Gary used to say, we spill, the big. But this is going up against, the Goldmans, the Citibanks, Morgan Stanleys, the insurance company. We won Best of Show in the first year in which we entered the Revolution campaign. We won lots of other awards for subcategories. but it was so dramatic and it was so emphatic, and it turned out to be so successful, really putting, ISC on the map. You'd go, as I ran the sales group to the business development group, you go to trading desk, and people would have the full page ads that we ran in the Times and the Wall Street Journal, teed up on their at their desk. So we really, and that was our primary target audience. So there's a lot that goes into what the positioning study was, and it ultimately culminates, as you see it externally, in advertising, in other communications, as I noted. But you saw that, and you gave people, by showing it and being so dramatic, you gave people to try, you gave people permission at the trading desk, the people who were sending us the business, which is what we needed. You saw that demonstrated, and it gave people a permission to send volume to the ISC. And I'll come back to you in a moment, Patrick. But the other thing that the ISC was different from the other exchanges is that, at the CBOE, you go down, you go out, you go to Ceres Cafe after the trading day, and you drink, have beers with the people who were sending in the order flow, the market maker, the individual market makers, people, the ISC, or excuse me, at CBOE. I used to enjoy going down the floor and talking to the market makers and the guys sitting in the business. You didn't have that at the ISC. It was disconnected by a phone. So we had a whole separate effort where we connected people physically in terms of the events we did, dinners, golf events, where we connected people, because they didn't have a personal relationship like the people on the floor exchanges had. So there were lots of different things we needed to do mechanistically to certainly not recreate the floor, but recreate the relationships people had on the floor.
Yeah, that's a very interesting point, because I can well remember when, and I mean, let's face it, I wrote a book saying that the floor trading was something that was basically dead because it didn't have an economic rationale behind it. And I mean, if it did have an economic rationale, it would survive. And it's quite incredible because so many people at the time said, oh, well, that's it. The new electronic thing will be perfect. And I can remember then having to talk to lots of exchanges, particularly in Europe, as they were going electronic, and saying, have you really thought through the change that you get when suddenly people aren't actually face to face with each other and dealing? I know it's more efficient, but suddenly you lose a lot of that. Yeah, as you say, marketing mojo. I mean, that marketing intel, because you may not know exactly who a pit broker is executing for, but you can certainly tell exactly who executed it because you can see him standing right there, or her standing right there doing the trade. Right. And that's and as you say, you can find them in Ceres Cafe in the evening without too much difficulty, as everybody was there after the market closed. It was a very, very interesting time. And certainly I remember you showing me some fascinating evidence at the time of how effectively ISE changed the options market, because you hit the nail on the head earlier. The options market for equity options was all retail. I mean, it was what, 80-90% retail through the 80s, through the 90s.
It was probably, we assume with CBOE, and the way we measure it is based on contract size, which is imprecise. Yeah. But when I was at the CBOE, I ran what was known as retail marketing, which was 85% of the business. And that was coming through, well, to the degree that you go through the 87 and then later 89 crash, which severely hampered the business. But you had retail investors trading equity options and OEX. And the 15% that was institutional was largely trading SPX or the missiles, the Amex or something else like that. So, and the reason, and that's what, again, the ISE was so, again, revolutionary, it changed the whole dynamic of the mix. One of the reasons institutions didn't trade options in XPX in the early days is because it was so bloody inefficient. The futures markets were big and much better and more efficient. But the retail, the equity business, the equity options business was just poor, and they didn't trade it. It was, if you had a Goldman Sachs account, and you had 10,000 shares, you might sell some calls or something like that, but you really weren't seeing the kind of volume that the ISE was able to demonstrate, because we started attracting institutional investors. In my later years at the ISE, we were thinking the business was probably about 50-50 overall, which was, it's dramatically changed, and not just as a percentage being different, but the fact that the volumes just clearly exploded like crazy, as you saw into the 2000s.
Well, yes. I mean, the December 7th, 2016, as fintech is being discussed at CE Impact here in Wrocław, a child is born. That child is going to live to be 130 years old. Their world is going to be unlike anything that we've ever seen before in history. They're born into an entirely digital world. When they get to reach the age of 18, they're probably not even going to have a driving license because they'll have a driverless car. They're going to have incredible opportunities through nanotechnology and biotechnology and the whole world of finance. The way that they deal with their pension going forward, even whether or not they actually use a bank, those are all going to be radically different throughout the course of their lives.
Hello, I'm back. I don't have a question, so I see Patrick. Maybe hold on. I'll wait for Patrick. A question: what advice would I give to someone wanting to work in the financial services industry? I presume in the marketing, the marketing side of the world. Well, I used to do a mentoring program at Cornell where I went, and I would tell people it's great, and most everybody in this program came out of the packaged goods business. I'd say it was great to have the packaged goods experience because that allows one to really develop a broad sense of how to work in branding. I later came to modify that and say, well, that's nice, not really necessary. Lots of people that I work with, if you work with someone who has packaged goods experience, that's great. But it's something that you really want to have a sense is this what I really want to do? And why do I want to do it? And obviously be convinced of that. And then, as I said a moment ago, when I first got into this business, I didn't know all that much about options. Yes, I traded some retail options as an investor. But I was really, I would say, not so much naive, but I didn't really have the education and the perspective that one needs for being a marketing person in the options business. So it really helps to understand, if you want to work in financial services, to really know the variety of products that you have. Financial services is vast. I mean, you have lots of different companies who are in the business. You have the buy side, you have the sell side, you have hedge funds, you have private equity, et cetera, et cetera. I don't need to go through the litany. You have exchanges, but understand the products, understand the business. General advice for people is if you can connect with someone who is in the business and has contacts, you don't have to say, "Go, please give me a job," but you might want to say, explain to me what you do, why you do, and why you love what you do, which hopefully they do. So you really need to have a sense of that and relationships. I came back to saying one of the challenges we had at the ISC before was that you didn't know the people who you were trading with, you were face to face with, for example, in a pit. And at the ISC, you may be talking to someone, but you're not talking to someone directly. You didn't have the relationship. Relationships are so critical. Most of the jobs that I got in my life came from relationships I had with people when I was in business school who went to work at different companies, relationships with former colleagues from company A or company B. So it's not unimportant to foster relationships in the business. And as you say, you think you may want to work in financial services marketing. Well, do you? You need to learn about it. And yes, you can read a lot of books. And yes, I know lots about futures or options or, whatever product or area. But at the same time, do you really want to do that? Are you cut out to be someone who wants to work in this business? And this is a tougher business, I think, in many respects than other businesses, restaurant marketing or packaged goods marketing. It's very, very different. It's a different position. At the end of the day, in a packaged goods company, the CEO was probably was head of marketing somewhere or within that company. in financial services, the guys who run the banks, that run the companies, are probably not the marketing people. All right. So it's something that it's a different career path. It's very rewarding. I loved it. I moved to it as I started thinking about it, as I said, when I was in business school. So I ended up in the best of all worlds, financial services marketing, because I love finance and I love the marketing world. So if there's another question.
Well, hopefully I've returned. Hopefully you can hear me again. I'm sorry. It's quite curious, actually, the flaw we're having here, because usually I freeze, and actually I look to be moving at my end of the network. So I'm terribly sorry about that. It's very interesting what you're saying about the whole business of marketing and developing people. We got a great question just come in from John T. Let's ask that. Bruce, do you believe your branding marketing experience has been an additional strength working in the financial markets?
Absolutely. Absolutely. Knowing who I am, if I had worked at a bank, for example, in marketing, I don't know if I would, John, been able to do what I did. Leaps. I'll briefly talk about that. I had just been the Doritos product manager, and then the way we got to Leaps was through this is coming after the '89 crash. Volumes were down. We were looking for different product ideas. We reviewed all the CBOE research. We had done a series of one-on-one interviews, and we had different marketing approaches. But we had some different product ideas, and one of them was this long-term options product, which really resonated with a group that I put into the research that were people who owned equities, but have never traded options. And it really resonated with them because we were at the CBOE trying to revitalize growth in the whole industry, which ultimately led to the OIC. I'll come back to that. But, I went to Duke Chapman as a chairman of the CBOE, and I said, Duke, we don't want to call this product long-term options. Options make your hair fall out. They give you cavities. It's a pejorative word. I think we need to create a brand around it. And he goes, okay, good, great, go do that. Which ultimately I was fortunate enough to do. Working with what the LE LEAPS originally was supposed to stand for long-term equity appreciation and protection securities. It was a brand. At the end of the day, it made no difference what it stood for. And in fact, the SEC said, well, you can call them LEAPS, but it can't stand for appreciation and protection because that's too promissory. Okay, so we got a thesaurus out and it came up with anticipation, big egg BP. It made no difference what it stood for because at the end of the day, it was going to be called LEAPS. It wasn't long-term options. And then we trademarked it. And then, but we want to be the only one to trade LEAPS. Going back to the monopoly world, we had LEAPS on IBM, but I wanted LEAPS on Apple. So we gave for I think $1, the licensing right to the other exchanges to use the term LEAPS because we wanted everybody to use LEAPS as opposed to using options. I don't think I would have been able to do that if I had been a bank marketing person. So yeah, absolutely. It gave me a different perspective, different dimension on the world, which is great to have, to have this, today you might think diversity. Well, I had a very diverse marketing background. I would not have been, I'm absolutely convinced I would never have been able to do what I did at the ISE, CBOE, had I not had that experience.
So volume. It's just been exponential in the options market. I mean, through your time since you left it,
right.
How do you explain what took off and what really drove not just the volume, but let's face it, we're talking about building the 5th exchange, and now there are 15?
Quite honestly, I don't know because you have each exchange organization. I guess the ISE is now part of NASDAQ. I have no idea how many options exchanges there are today, and it makes no difference. And you have different market structures and pricing structures, et cetera, et cetera. But it opened up the world that you can do things differently than just have a monopolistic floor. I mentioned the OIC a moment ago. When I was at the CBOE, and I was one of the dozen founders. I guess there were 10 founders, whatever, the 6 options exchanges, I guess a dozen, including Gary and David, who were at the NYSE. And the purpose of the OIC was to build options volume, build industry volume. And we wanted, my vision was that options become an everyday financial services product. And finally, today, or not just today, we've been able to achieve that. You have the show on CNBC, Options Insider, whatever they call it, on Friday. And I put together, when I was at CBOE, a program with Bloomberg, where we were one of the sponsors of Bloomberg when their initial forays in, when they had Maryland Public Television produce a show for them. I wanted options, and the reason I got into the options business, I thought this is a great product. And if you didn't have exposure to this product as a retail investor and you had an interest in it, it was irresponsible on the part of your broker. Well, that may be a little bit extreme, but I believed that this product had great utility. And I think that that's being proven today because it's a wonderful product. There are wonderful educational resources beyond the OIC. All the exchanges have information, all the brokers, very importantly, and they use this as a selling point. They have informational resources and they have TV commercials to that. So I think it's a product that's taken a long way, if you look at a lifespan, to develop. But a lot of the seeds that we started in the 90s planted were able to enable that and engender that. And then the OIC, with the ISE becoming a far more efficient place to trade it, much lower cost. You had all the right formula for the thing to really grow and grow and grow, which you're seeing today. Barring all the excesses that we saw during COVID, because there was so much money flying around and people were saying, let's take vast risk. I tell anybody, you need to understand what you're doing with any financial services product, and certainly options.
Thank you very much, Jonathan Cowan. Hi, Patrick and all chaps. Best from Jonathan Cowan. Thank you very much also to John T for that great question earlier on. One thing that fascinates me, you talk about education, and we've had such a drop through of different kinds of education. Even on YouTube today, there are hundreds of people educating on options, and some of them are quite brilliant. Really quite alternative. But tell me, you mentioned it earlier, you took up trading in order to manage to learn the options business. Mm-hmm. What was that process like, and how is it today?
Well, I had the benefit at the CBOE of going through the Options Institute the second week I was working. So I'm a sort of a studious kind of person. I read a lot of books. I talked to people. So I learned, and then you need to learn. You need to try to go out and fish. So I started using options. I was basically selling calls. I became enamored with put selling because I like to get paid if I'm going to do some work, and I turned out to be much better as a put seller, which is a strategy I use today to a great degree, versus being a call buyer. But and then you were talking about, where I had Counts Brown and Company, Schwab, Fidelities of the world. You're going through, through discount brokers. And we started doing a lot of educational things. We would go to what's known as the Money Show. And I was the first one to take the Options Institute instructors, notably Alex Jacobson, who later worked for me at the ISE. And Dr. J. I used to take Dr. J and Alex and I, we'd go to Money Show and we'd give presentations. And this was, again, before the OIC. The OIC had a sort of a separate campaign, but you needed to go out there and start it. And that was really the nascent steps that were being taken. And now you have lots of people who are for pay for education programs. Again, you have all brokers, you have people on YouTube doing it. One of the things that we did at the ISE, we started doing Apple Podcasts. The iPhone was created when we were early at the CBOE, ISE. So we started doing podcasts, and the podcasts that we put were amongst the top 10 financial services podcasts that were on the App Store. So you started doing things because, again, you want people to know. You don't want people to make a lot of money and then all of a sudden do something stupid, lose a lot of money, and leave the business. You need to know what you do. So it's prudent. And so the way I learned it, there were far fewer resources then, and you need far more resources now. So that's another leg another step, another support point for why the business has grown so much.
Yes, quite incredible, the growth of that business throughout. And also, it has to be said, the compression of commission over the course of the last 20, 25 years.
Right. Well, when I left the ISC in the financial services crisis, margins for the exchanges were going down because the costs were coming down, and more people were doing more things to try to be competitive on a cost basis. And then with commissions, brokers, if you traded enough, the brokers had commission structures, but now with free, that's certainly very, very helpful. So yeah, you have far less friction in the business from a return standpoint, and that's obviously that's only helped engender more volume as well.
So in recent years, after ISC, you've been doing some private equity VC investing in your own right. How do you compare and contrast that with the much faster pace of options trading?
Well, it's vastly different, and you hopefully understand what you're getting into as an angel investor, a VC investor. I mean, nowadays when I trade, I'm selling premium, selling volatility. I'm selling things for a week, a couple of months, because you want to use the expiration curve to your benefit. You invest in a company. Companies I've invested in, sometimes they have an exit, after a few years after I've been in. Other times you're talking, 7+ years. So its nature is different, but I just look at it. I've looked upon it as a diversification of being in the public markets, either on the equity, the fixed income side, and just something that I've taken to, and the jury is still out. At the end of the day, I've made some money, I've lost some money in different investments, which obviously have to be prepared for that. It's just a different thing. And if possible, I try to get involved in the management of the organizations in which I'm an investor. I've been on a number of advisory boards, or a strategic investor to some of them. So I want to allow them to use my expertise if it's something that will have value for them, ultimately value for me.
Terrific. Now, I must apologize because Peter Secon, you've sent us a question, but for some reason it has not appeared in our input. So Peter has asked, what's the biggest difference you have experienced or seen in the marketing world versus the financial markets sector?
Well, it's vastly different. In that, and there may be more than one thing I'll point out, is that if you're someone in the marketing world, the packaged goods world, the restaurant world, retail world, you're dealing, directly with the end customer, in the sense that the person who is standing across the counter from you or is looking on your website, he or she is the one who's buying it. In the financial services world, you're going through, at least certainly on the exchange side, you're going through a broker dealer, because in the options market, you have to go through a broker dealer to make a trade. Well, I guess you can buy some bonds, Treasury Direct. More likely, you're going to go through your broker dealer for that, or stock, irrespective of all the different ways that stock may get executed, as opposed to exchange, a broker network, or what have you. So that's the difference. I think from a lifestyle standpoint, it's a tougher business, because financial services, that is, because there are great demands. In the packaged goods world, marketing is generally at the center of the company. The CEO probably may have been a marketing guy, more likely a marketing guy. And so people have a different view of marketing, different acceptance of marketing. It's not this god-awful cost structure that people may have to support begrudgingly, as opposed to, this is really what's creating value for a company, creating the brand, touting the brand, supporting the brand, improving the brand, extending the brand, new brands, as opposed to the financial services business, where yes, you're basically communicating something, but you may not be involved in the development of those products. So it's just a different mindset working in the financial world versus working in a packaged goods world, which is it's my experience.
Yes, and you hit the nail on the head there, because I can't think of any exchanges that were run by marketers, and a lot of exchanges that were run by people like lawyers at one point in time, although not the case of the ISE, which obviously brings a whole different dynamic.
Yeah, well,
Um,
but the ISC, Gary Katz, ultimately, he was the marketing guy, as was David. They were the marketing guys at the NYSE, and then David was the CEO, the initial CEO, and Gary was the SVP of Marketing Business Development. And when I came in, he was the COO, then became the CEO. So yeah, so it was different. Again, we were a very different place. But I think if you look at the folks running the big banks now, I can't think of anybody who may have been a marketing person originally.
No, I think you're absolutely right. And actually, let me just spear off here while we're talking about the fifth options market with Bruce Goldberg. Jonathan Kahn makes a great comment. I guess you read this book, which is, in my opinion, the Bible, Option Volatility and Pricing by Sheldon Nattenberg. I have to say it's a great book by Shelley Nattenberg myself. I think everybody has read it, haven't they?
Yeah, Shelley is a great guy. His brother, Paul Nattenberg, was the chairman of the marketing committee when I was at the CBOE, and I'd met Shelley. So so there. I mean, options is a strategic investment. Macmillan and Harry Roth's book about leaps.
Yep.
So there's lots of different places that you can go find books.
Yeah, I think so. There's the late Gary Gastineau had a very good book.
Yeah,
There was
right.
Nyhoff and Labashevsky, or Labazewski, as he's pronounced in America. Their options book, which I think was more about foreign exchange options, was very, very good book.
Patrick's book. You got to read Patrick's books too.
Well, what do you mean?
They weren't written at the time.
No, they weren't. No, nothing much. Yeah,
we met Patrick in 2002 in London when I was at Derivatives Week. That was when we.
That's right. 21 coming out in 21 years ago. It's quite incredible. Well, what an incredible arc that has been, Bruce. And of course, you were innately involved in the world of the capital market revolution as an actor with I think two of the greatest exponents of the capital market revolution at the time, Gary and David. Yeah. Where do you think the capital market revolution goes next?
It really, I think it goes into the, loosely termed the crypto world. I haven't been all that close. I've had some exposure to it. You could see all the call them exchanges, different venues, failed and otherwise. The nature of an exchange, and there are significant responsibilities, certainly as SEC, CFTC regulated exchange. I think it's got to go in those, the crypto market has to go into a far more disciplined, regulated, trustworthy arena. This isn't to say the volume of Bitcoin should be, the value of Bitcoin shouldn't be 10,000 versus 60,000 versus 200,000 or whatever people are projecting it to. You need to have the structure, the revolution. You can call crypto revolutionary, yes, but a more disciplined structure needs to be, I wouldn't say enforced, it needs to exist for that to really grow to its potential. It's nothing to say about the value of the blockchain, elegant, greater applicability, but you need some more, I'll use the word legitimacy. You need some more trust in that world. So that's where I view is really it needs to enter that world as well.
On that note, Bruce Goldberg, we've discussed building and why the world needed a fifth options exchange. I think you've made the case absolutely clearly. Ace marketer the world over, all the way from potato chips through the options markets, and brander of the International Securities Exchange with a revolutionary campaign. Bruce, it's been an absolute pleasure to see you on IPO-VID number 91 this evening. Thank you very, very much for your time. I want to say a big thank you to the production team this evening, because we've been having a few problems at my end, for which my apologies. Thank you very, very much. Janella, Natalie, Racy, you did a fantastic job. And thanks, as always, to our loyal commenters and viewers, John T., Anthony Clancy, Les Calvert, Simon Huckle, Jonathan Cowan, and Peter Sekon this evening. Next week, we're going to make the case for Kazakhstan and Kazakhstan Stock Exchange, and that's with their CEO, Alina Aldenbergen. It only remains for me to say thank you once again, Bruce, for joining the show. My name is Patrick L. Young, wishing you a great week in blockchain, life, and markets. See you again next week.